We are joined right now by Jacob Walthour, who's Blueprint Capital Advisor, CEO, and co-founder, and Neela Richardson, who is the chief economist at ADP's Research Institute. Neela, let's start with you. What do you think walking away from this? Any numbers here that concern you? Anything that makes you think, okay, this is maybe a little better than we had anticipated?
Well, Becky, it is good to see the numbers moving in the downward direction, that we didn't see a pickup in the other direction. I think what's interesting about the jobless claims numbers is that we have more certainty about what the labor market looks after September than what we have before September. If you look at, the vaccine rollout, the anticipation of spending this summer as people re-engage normally with the economy, the reopening of daycares and schools in the fall for full time, more confidence in September. What this data shows us is what the labor market is doing right now, and you're seeing a little bit more momentum. We're seeing that in the ADP data for early May as well. So this is a good sign pointing to a continued increase in that momentum in the labor market through the summer and into the fall.
Jacob, does this change your mind about anything you've been thinking when it comes to market trends? Does this tell you anything's happening faster, or has the market kind of figured out that this was going to be kind of the curve in terms of the economic reopening?
Yeah, I've been focused a lot more on investor sentiment than I have been on, the fundamentals of individual companies. I think we're at that point where people are looking to interpret data like that, which we receive today, and figure out what the Fed's going to do with that. I think they're also thinking about what could be coming out of the Biden administration in the way of spending policies and what impact that could have on inflation and the overall market. And when I think about the investor sentiment cycle, I think we're in that anxiety phase. As you know, on the upswing of the investor sentiment cycle, you have generally bullishness. You have excitement. You have greed, you have euphoria, and then you get to a point where you have irrational exuberance. And then on the way down, you have anxiety, you have denial, you have fear, panic, capitulation. I think we're still early on the downside in sort of that anxiety category, which just has investors uneasy. I don't think that cash levels are rising or people are exiting the equity markets. I'm just sensing from the price action in the markets that people are not necessarily committed to a direction one way or another. In other words, they're sort of sitting tight with their seatbelts on, waiting for a clearer pattern of positive news to support the market. And my concern is that we won't get that. We'll continue to get a mixed bag of data.
Jacob, I have to say,
but we have earnings coming in.
The one thing I would say, though, is every time you seem to start to get a slight pullback or, anything more than a couple of percent, it feels like there's so much money on the sidelines that is willing to come rushing back in, that they've been waiting for a slight discount to come in. And that's the one thing that seems kind of hard to figure out, what it would take to get that money on the sidelines out of that game, buying every time there's a dip.
That's been part of our strategy here for the last 9 to 12 months. We think there's going to be volatility in the market, but overall, we're bullish on the market. And so we look at each of these individual names, and when they experience their own private bear market for whatever reason, we think that's the time to get in. So when some of these big tech names more recently, started going down, 20% or more, from our perspective, that represented another entry point for the big tech names. And I think that's what you've seen as tech names have started their own little mini rally here again in the second quarter.
Shepard Smith here. Thanks for watching CNBC on YouTube.